Okay, good afternoon. Am I audible to all of you?
Yes, sir, we
Is
can hear.
Yeah, I think all of you have received the what we call in the model correction papers. Based on that, we will start the what we call in our session. In the meantime, during the session, you can ask any question on the online by chatting, as well as the I would like to introduce the myself as I am a Kosala Madushanka as a lecturer of the Management Accounting Finance in JMC, as well as the e-learning lecturer. Then most probably this paper has been prepared based on the past 5 6 papers has been analyzed. Then based on that, I think most probably there will be more than 75 marks will be available based on this suggested uh, areas. Then hope you hope you will be go through these papers, as well as some of the past papers. I will be share those some questions. Based on that, you can go through those questions as well. Then based on that, you will be earn more than 75 marks. At least 90 marks will be available. Then go ahead with the session. Okay. In general, this session I have been planned. There are 9 questions. Due to the time limitation, I think we are not in a position to do the all of the question. In the meantime, I would like to mention some of the key area in the this syllabus. Okay. Then in the meantime, please write down those area. Based on the next couple of weeks, you will be easily go through the exam. Definitely, exam will be easy, but you have to maintain the time management skills. Otherwise, you will be stuck in the some sums and calculation those area without having good practices. That the best practices should be there. Then I hope it will be value addition during the exam. Keep in mind those things. This question has been prepared based on the working capital management. Generally, we call as a WCM, working capital management. working capital management. That is the WCM. Then second question has been prepared based on the marginal costing. That is the there are two costing method: absorption costing, that is the AC generally we call as well as the marginal costing MC approach. This time I hope marginal cost approach will be tested. Then keep in mind some questions based on the marginal cost method. Third question has been prepared based on the budgeting. Budgeting side, budgeting. This is the functional budget has been tested number of times. Then this times also will be tested in the functional budget. I think all of you aware the what is the meaning by functional budget as well as the master budget. Then here this time sometime there will be some theoretical question as well. Why majority of the students are lacking some theories. Then sometimes there will be a 10 to 20 marks will be available in the theories. Other than that, then question number 4, this is the relevant costing approach. That is the relevant costing, that is the every time examiner has been tested relevant costing. That is the cost classification in which this has been you have been learned in the 82 as well. Relevant costing. Thereafter question number 5, then this question will be definitely will be available. There is a cash budget. Here 10 marks, previously 5 marks functional budget. All around will be the 15 marks will be carried out the budgeting. Definitely it will be there cash budget. This cash budget has been request from the some basic thing, but those cash pattern you have to be careful evaluate. Even though without having proper idea, you can go through the some calculation, but you need to know about the rationale behind that. This kind of cash calculation method, cash collection mechanism is available in the practical scenario. Then you need to know about that one. Thereafter, definitely question number 6 topic, that is the WACC calculation. WACC, generally we call as weighted average cost of capital. 10 marks question will be there. Most probably this type of question will be there. Then go through. Actually, I am guessing some question will be there, but I am not a person in the responsible for the preparation of the question paper. But based on the practical aspect as well as the past 10 years period, based on the experience, I will share my experience. Then you will be easy go through the exam. Then question number 7, that is the another area in the limiting factor analysis. This time also limiting factor analysis will be there generally, because as a management accountant you need to know about the what are the limiting factors available in the your organization. Otherwise you are lacking to the lacking knowledge about this area. Definitely due to this kind of economic situation available in the Sri Lankan country, as like then you have to have think about those area as a practical aspect, because we are working in the bankrupt situation, no, in the as a country. Then we need to know about the what are the our scarce resources and how to utilize to earn maximum profit. That is the obvious question we are facing these days. Actually, not these days. Last couple of years also, over the period of the last 2 years period. Then, based on that kind of experience in there, then this time also examiner will be tested that question as well. Then question number 8. This question also there. Someone can think all of the question are available. Just definitely this question will be there. This is the process costing. Process costing, that is the opening and closing WIP there. Process costing including opening WIP and closing WIP. If you have any doubt regarding process costing calculation, please let me know. Thereafter, simple break-even analysis question, CVP analysis question, break-even point question. It is the multiple, not the one product. That is the different product. Okay. Question number 9. This is the major part of our exam, variance analysis. Here, material price, mix, usage variance, then labor rate and efficiency basic variance, variable overhead expenditure and efficiency variance. Fixed overhead will not be tested, but I would like to introduce how to calculate the basic fixed overhead variance. Here, operating statement reconcile the budgeted profit and actual profit. When you are sometimes in this time question paper will not be tested the profit, there will be a contribution. Because of the in our syllabus we are working on the marginal approach, not the absorption approach. Then there will be a question reconcile the actual contribution versus budgeted contribution. Those area will be there, keep in mind. Still, do you have any question regarding the what we discuss in the paper analysis? This paper has been available in the majority of part of the our syllabus. Then hope you get some idea about the testing questions. In general, sometimes there will be a what we call in the budgeting question will be some additional thing. That's mean working capital. That mean budgeting question will be linked into the some practical industry related question. That's mean if you see the last couple of papers, there was some hotel cash budget, there was a construction cash budget. Likewise, separate that be specific industry or specific business organization related cash budget will be there. Definitely, it should be there because of the if we are familiar with the cash budgeting, cash inflows and outflows will be very depend on the industry approach. Some industry are having a high cash inflows, some industry having a high cash outflows, sometimes average in and out both. Then particular student need to know about the variation between the industry aspects. Then definitely examiner will be tested the specific industry question. I kindly request to all of you go through the past paper cash budget question and identify the what are the industry has been tested. I also like to draw your attention. Please give me 1 second. This is the 2025 January question paper. All of you can see this question paper. Please let me know. All of you can visible this question paper. Please let me know.
Yes, sir.
Okay, this industry, this is the Poppy Limited manufacture and sell traditional sweets and distributor supermarkets. Manufacturer in supermarkets and sweets and distributors. That's the manufacturer and distributor business organization. 25 January. 25 January. Please make a note. July 24 cash budget has been, that is the manufacturer of furniture. Manufacturer and sells customized furnitures. That is the another manufacturing question. Why I am say that this kind of business has been too different with the other industry. Previously, sweets and sweets manufacturer and distributor, their cash collection will be vary to the compare with the manufacturer of the customized furniture. Next question. 24 January. 24 January, that is the hotel industry. That the hotel has high demand. That is the hotel 80 rooms. Then this question also go through. That is the 80 rooms. They have been occupancy ratio has been mentioned of the per day, that the per month period. Then how many rooms are having? what is the one room per day, then particular month there are 31 days, 30 days, likewise, then you have to multiply by the 80. Simple mathematics approach, but question will be vary. When this is the one room forecasted, then you have to add multiple into the 80 rooms per day income, then how much the monthly income. Then next one, 23 July. That is a manufacture and customized gift item based on the pre-orders. This is also another special question, gift items and pre-orders on pre-orders. Go through this question as well. Then next one, 23 January. This is the purchase of the material X in bulk and packages into the small 1 kg packets and sell through the dealer network. That is the agency relationship. Another business organization. Dealer network. Like Coca-Cola, Manchi, Maliban, like they will be packed into the smaller 1 kg packet. They purchase bulk, then put into the small packages and sell through the dealer networks. What kind of business are going on? Likewise, if you see those cash budget question, they have been tested in a variety of the manufacturer organization as well as the sellers organization. Then keep in mind, this time also will be the different industry. Sometimes there will be online sale platform also link into this question. Why I am say that in these days we also some restriction and ban condition available in the AliExpress law. Likewise, uh, Temu app. Likewise, there will be some government rule and regulation has been imposed in the near future. Then based on that, sometimes examiner will be taken into consideration in those area as well. Then keep in mind those area also. Okay, keep in touch with the WhatsApp group. If it is a those kind of question is available, then I will be share. Then you can go through and get the knowledge from the how to tackle that kind of question. Okay, now we move to the special question in this one. I will be going to the Excel version in the share the screen. Then now all of you can see the question paper. Then firstly, I will be go through with this question. Budgeting, what we will call the marginal costing approach. Marginal costing means you need to know about the working under the working. Number one, contribution. Actually, in examination, you need to know about. You don't want to do that, but as a practicing, you need to know about the contribution. How we calculate the contribution? Selling price less variable cost. What is the selling price in this question? Selling price is actual selling price. We need to know about that one. 4,000. Sorry, 2,400. Then what will be the variable cost? Direct material 700. Then direct labor 520. Then next one, variable production overhead. All those variable costs we need to consider when we calculate in the contribution. All of the variable cost. Then 1,700. 1,370. Is it correct? Then 1,030 rupees is the CPU contribution per unit. CPU. Then here examiner has been asked income statement. Then income statement. Gem Indus Interior. income statement for the month end May, May 25. Then in here we need to know about the rupee figure, that is the rupee value. Then revenue or sales. Sales. What is the sales? We will sell actually 5,000 unit at what price? 2,400. Then 5,000 unit into 2,400. Then 12 million sales. Then deduct the variable cost. Variable cost. Under the variable cost, you need to know about the opening stocks valuation. Opening stock valuation. Opening inventory. In this question, there was no any opening inventory, that's the 0. Then add direct material cost. How much the production unit? 5,200 into 700 rupees. 5,200 unit into 700 rupees. Cost is how much? And multiple by the those figures. 3,640,000. Then direct labor 520. This is the direct labor cost. How many quantity? Same 5,200 into 520. And 5,200 into 520. 2,704,000. Then variable production overhead. Same quantity 5,200 quantity into what is the variable overhead ratio? 150. Then 5,200 into 150. 780,000. Then you have to deduct the closing inventory. How much the closing inventory quantity? When here we have produced 5,200 unit, here this one 5,200 unit in introduce, there is a produce, only sell 5,000. Then difference between production and actual sales, then the 200 quantity. Then 200 into 1,370. Then you need to calculate the total variable cost by adding those four figures. Yes, 6,850,000. Then you will be able to get the contribution, total contribution. 5,150,000. Up to that, all of you clear? Please let me know the some message. This 5,150,000 figures you can reconcile based on these figures. How many quantity we sold? 5,000. Only 5,000. What is the contribution per unit? Rupees 1030 rupees. Then multiply by those figures, then you will be able to get the direct contribution. Here, all of the variable cost has been deducted. Then what are the remaining cost available to deduct? Fixed cost. What is the actual fixed production overhead? Is 4.9 million. Then we will be able to get the net profit 250,000. Is it correct? Please let me know those who have been getting the same answer. Is it correct, Lama? It is correct. All of you can see the screen. Please let me know. Brian, Vihanga, Vidushan, Nuha, Fatima, Hafsa, Leo, Tashani, Kenuli.
Yes.
All of you can see the screen now?
Yeah, yeah.
It's okay.
Yes, sir.
This answer is correct. Did you reconcile it? Okay. In general, you have two rules. That the two rules mean first, working should be mentioned properly. Working number one, inventory valuation. It is sometimes examined if it is asked how we value the inventory, either opening or closing, whatever the inventory quantity into variable cost. Variable cost. Under the marginal approach, we need to know about the variable cost. Variable cost generally consists with the available all of the variable cost. Direct material, direct labor, variable production overhead, those things you need to take into your calculation. Inventory valuation should be there. Okay. Once complete the session, I will share the answer as well as the by Excel or PDF version. This question will be very easy based on the available information. Go through and earn the full marks, 5 marks. Then this question also, question number 3. That is the very simple question. I am going to solve this question by using the simple approach. That is that they are Nova Limited expect to sell 240,000 unit of a product in 2025. All of the 25 years period. The opening inventory is planned to 20,000 unit, while the company maintains the closing inventory equivalent to the 10% of annual sales. You are required to prepare the production budget. I will show you the process of preparing production budget. Initially, you need to know about the limiting factor. What would be the your limiting scarce resources? In general, in budget preparation, we are lacking to sell our expected produce quantity. Then we are lacking means we are limiting to the whatever the produce quantity we are not in a position to sell in the market at once. Then we are lacking in the, like in sense we are restricting, we are facing some difficulties, then those area we have to take into the first consideration. Then we need to prepare the sales budget. Sales budget, under the sales budget we have to think about selling price and selling quantity. Then total turnover in terms of the rupee. Here we need sales quantity. Thereafter we will be going to the production budget. Under the production budget, we will start the sales quantity. Sales quantity. Then will be deduct our opening finished goods. In terms of the stock, okay, quantity. Here all of the calculation going on the quantity. Then deduct the opening. In general, in finance side, the financial accounting side, we will add the opening finished good, but here we are working on the backward calculation, backward method. We are thinking how much we can sell. Based on that production budget, we need to know about the how much that the how many unit we have to produce. Then we have to deduct in the vice versa. Opening stock will be deduct, closing stock will be add. Why? Once we produce, as well as the produced quantity will be sell. After selling of the whole of the produced quantity, we are not in a position to maintain the next month required quantity. Then we have to produce that as well. That's why we will be added our expected finished goods, closing finished goods. Closing finished goods will be added. Thereafter we will be carry out the produce unit or production unit. In here, how many units we are planning to sell? 25 period, 240,000. How many quantity already available? If we available the 20,000 in the as opening stock, we don't want to produce. Why? Those are available. If it is available, why need to produce again that one? No need to worry about that. Then we have to deduct 20,000. Then here, closing inventory will be decided based on what? Our expected sales. Then how much? 10% on this one. And production quantity will be 244,000. The next one, we have to prepare the material usage budget. It has been not tested usage budget in this question. Material usage budget. Under the material usage budget, we need to know about the production quantity. Usage mean material will be usage based on the different kind of material. Then we need to know about the material A, material B. Likewise, if it is the whatever the material available, we have to draw those rows. Then get the production. Whatever the production quantity, we assume 244,000 we have to produce. 244,000 we have to produce either material A and material B. Then we need to know about the per unit requirement. Per unit material requirement. Material per unit material requirement. We assume in material A need to 2 kg. Then into 2 kg. Then how many material in terms of the kilogram? 480. Here 5 kilogram we need. Then multiple by the 5. Then those kind of material we need to get in the usage 1.4 million. Sorry, 1.2 million is here 484,000, 88,000. That is the production unit requirement usage. How we get this quantity? If it is the examiner has been provided the information, you need to get those information. Production quantity into what? Per unit requirement. Here 2 kg. I have been guessing this one. This is the 5 kg requirement. And multiple by this one, then you will be able to get the 488,000 in terms of the kg, in terms of the kg as well. Once you complete the material usage budget, thereafter you have to prepare the material purchase budget. When you prepare the material purchase budget, this is the usage budget, usage amount, usage quantity. Here also will be start usage, how many unit we have will utilize for the production. Thereafter, we have to tackle the opening and closing raw material. Opening raw material quantity. Then plus closing raw material. Then you will be able to get the material purchase budget, purchase quantity. All of you can understand what is the flow of the preparation of the functional budget. Do you have any question regarding how to flow in the functional budget? Do you have any question? Please let me know. Rashmika, Ashif, Brian, Shafana, Kenuli, Samitra, Abdul. Do you have any question or are you okay with this calculation? Please let me know. ළමයි ඔයගොල්ලෝ ඉන්නව නේද? නිදි නෑ නේද?
Yes, sir.
Okay. Then we will move to the another critical area in our syllabus. WAC calculation. That is the question number 6. Question number 6. WAC. In here, we need to know about the source of the funds. Generally, here question number D, WAC calculation based on the market value. The first final area. Then you have to know about the source of funds. How many sources are available? Ordinary shares. Number 2, preference shares. Number 3, 10% debentures. Ignoring percentage, you can put in the debentures. Then market value. Market value you can go through directly. How we take the market values? Please let me know anyone how we get the market value, how to tackle the market values. Please, quickly, hurry up. Please let us know. Please, Lamai, update. Okay, how we get the market value? In general, you need to take into the what we call here number of shares, number of papers. How many quantities are available? One student has been provided the answer. Then how many units? Then here 3 million. 3 million number of shares into what is the market value? This is the market value. 120. Then into 120. Then you can go through the 3 million into 120. Next one, 5 million into 50 rupees. That is the market value. I will be yellow highlighted one. 5 million into 50. Okay, please go through this way. Don't do any other techniques. This is the easiest way you can go through and earn marks. 2 million. As well as your calculation will be very simple. Then into preference shares will be difference. No, here you have to get the 48, not the 50. There has been provided. 48. Then 2 million debentures. What is the market trade in? 102 rupees. 2 million 120. Sorry, 102. All of you hurry with the calculation. I think market value. Thereafter cost. That is the question has been asked from the will be tested in the ABC. This is the question. Calculate the cost of ordinary shares. Calculate cost of preference shares. Cost of debentures. Debentures are redeemed. Then those area we have to work on that one and get the figures. Thereafter, here I am working on the model. Then thereafter you will be get the weighted value. Weighted value. How we get the weighted value? This into this. Then this into this. Next one. Next one. In general, you need to get the sum of the different source of fund. 800. That's the 804 million. 804 million. Then in same you need to get this one. This green color sums. Thereafter you will be calculate the WACC. How we calculate the WACC? This divided by this into 100. Then you will get the final figure here. Then I will be calculate the ABC answers. A, B, C. A is cost of equity. Cost of equity or ordinary shares. In here, dividend per ordinary share last year 15 rupees has been paid. Expected to growth is 10%. Then expected that is the Gordon growth model we have to apply. How we get to this one? Okay, then market value will be equal to the P0. Market value will be equal if you have any doubt please text me. Okay, then generally do you know the formula? Then here D0 plus 1 plus G divided by RE. That is the RE minus G growth rate. That's the basic ways. Okay. Please give me the cost of ownership. Once I done, you will be get the answer, but I need to know about the your answer. Please text me. What is the your answer? Quick, hurry up. Very simple. You can paste the same formula. P0 is how much? 120. 120. What is the dividend? They have been paid 15 rupees. Growth rate is how much? 10%. 10% means 0.1. Then RE is the unknown terms here 0.1. That is the rate we are seeking. Then you have to use the rearrange this formula. Then you will be able to get the answer. Then multiple by the cross multiplication here. Then RE minus 0.1. Then 10 rupees into 1.1. 16.5. Here 120. Then 1 minus this will be converted to the other side. Then it will be the plus. 0.1. 16.5 divided by 120 plus 0.1. 23.75. Is it correct? Almost 24. Is it correct? Now please let me know. Please share the answers. What is RE value? Return on equity. Is it correct? 23.75. Samitra, Kasun, Tashani, Shafan, Abdul, Ahmad, Vihang, Crispin Fernando, Rashmika, Fatima, Kenuli. Please let me know the answer. This should be the interactive session. Otherwise, you will be stuck in the middle at the exam hall. Please let me know your answers. Is it correct? 23.75. ළමයි ඔයගොල්ලෝ ඉන්නව නේද? Thereafter cost of preference shares. Am I audible to all of you? Please, please, please.
Yes, sir.
Have you get the answer?
Yeah.
Yeah, it is good. Perfect. In preference shares, there was no any growth. Then we can use the same formula without growth rate. Only D. Instead of RE, we can use RP. Then preference shares dividend is 6 per share. Market value is 48, 6 rupee. Then you have to get the directly answer. RP equal to 6 divided by 48, 12.5. 12.5. Final redeemable debentures. Redeemable debentures. Redeemable means there was a specific time period, particular debenture holder are having powers to get cash again. Redeemable debentures. That means if it is I am a issuer debenture, then I have a legal constructive what we call the right to settle that particular debenture at the agreed period. In here, there was a over a 4 years period, I have to be paid to those. I have money collected from the debenture holders, particular debenture and debenture holders. Then both agreement will be finished off within 4 years period based on this question. Therefore, if it is a debenture is redeemable condition, we need to evaluate the IRR, internal rate of return basis. IRR. Then go through the question. Debenture are traded in 102 rupees, redeemable in 4 years period. Debentures are coupon rate is how much? 10% interest. That 10% will be saving in the tax shield 30%. Then timeline, years, cash flows. In year zero, you will be purchased. At what price you will be purchased? Market value, market price. Market price is how much? As an investor, it will be the cost to you. Am I correct? Then
Yes.
1 to 4 years period, you will be receiving the net interest after tax. How we calculate the net interest? Particular debenture will be value, nominal value is 100 into 10%. Then deduct the x 1 minus 0.3 as a 30%. Then what is our net interest? 7 rupee, no? 7 rupee. In final year, then year 4, final year, that the year 4, redemption. Redemption value. Redemption will be in the 100 rupees nominal value. This is the 100 rupees, no? Then you have to use the trial and error, or else you can use the directly you can use the IR formula, but unfortunately in our examination will be not approved the formula calculation in the Excel, no? Then you have to use the discount rate, discount factor 5% as a guess, trial and error. In year 0, what would be the today value in the at the rate of 5%? 1 rupee value is the same 1. Then here you have to calculate the annuity factor. What is the annuity factor? Use the annuity factor formula. Factor formula or table. I will be share the table. Now you can see the screen. Here 5%, no? Can you see the screen? 5%. How many years period? That is the year 4. This when we come use the 5%, here 5%. How many years? 4 years. 4 years, 4 years, 4 years. By using the this way, this is the number of years. This is the rate discount factor. That is the future value of the annuity factors. For 4 years period, what is the rate? 5%. 4 3 3 1 0 1 3. Thereafter, you have to use the time value of money is the present value. Yeah, 4 years, 3.5, 3.54595. The present value of the single cash flows. This is the per 1 year. No? Here you have to use the present value of the single cash flows. Here, present value of the annuity factor. Annuity factor means the cumulative years. Here, 1 year single cash flows. Then in year 4th year, what is the rate? At the rate of the 5%, 0.8227, 0.8227. That's mean when you earn 1 rupee in year 4th, that's the 4th year, today terms 82 cents. Got the point? ඒ කියන්නේ ළමයි ඔයගොල්ලෝ හතරවෙනි අවුරුද්දේ at a rate of the 5% you will be earn 1 rupee. In today terms it will be worth to 82 cents. That's mean at a rate of the 5% interest paying account, if you deposit in the today 82 cents, you will be able to get the at the 4th year end 1 rupee. Got the point? Lamai, got the point? Got it? Then present value of the cash flows. Multiple by the discount factor in the cash flow. Then get the NPV is 0. If it's NPV 0, we can decide it. No. Then you have to increase the discount factor 10%. Discount factor at 10%. Whatever the discount factor, if you use today terms is the same. There is no any deviation. Today 1 rupee value is the 1. Then 1 to 4th year annuity factor. 1 to 4th year at a rate of 10% here. Here, look at the screen. This fact table you have to do 10 year, 10%, 4th year, 10%. Then you have to go to the here and check the highest rate. 3.16, 3.16, 16987. Then for single cash flow, 4th year at a rate of 10%. 0683, 0683, 01. Then present value at 10%. In multiple by the cash flow into the discount factor. Then here minus. Then you have to decide the different rate between 5 to 10. Then discount factor NPV 5% at the rate of 5%, at a rate of 10%. Then NPV value is 5 rupees 0 cents. Here minus. Then get the difference between this one to this one all together. Here 0.5. Here 16.6. Is it correct? Now is it correct?
Yes.
Now you can decide the IRR. IRR equal to, then you can start the whatever the rate 5% plus, then 16.60 divided by 0.5 into 5.09. 6.53. Is it correct? Point 53. Then you have to use the here. Then tax rate will be 16%. 16% 02. That is the back. There will be a definitely 10 mark question will be carried out the back calculation. They quickly shall we go through the cost of calculation, cost calculation. Cost of equity, generally keep in mind this formula. Then cost of preference shares will be the directly calculation, very simple question. Then redeemable debentures, you have to do few workings. By using the present value of annuity factor and present value of the single cash flows, then thereafter you have to trial and error using this way. All of you okay with the answer? Okay. I will tell again the cost of debentures. Okay. Very simply way. Initially, you have to tackle the number of years. At the year one, as an investor's point of view, you have to purchase particular debentures at a rate of market price. Is it correct? No? Then you have to purchase at a rupee of 102. Then it will be the cash outflow. As an investor, if you are wishing to purchase particular debenture, then you have to spend money, then it will be the cash outflow. Secondly, you have to go through the question and identify if it is redeemable or irredeemable. This debentures traded in under 2 rupees, redeemable in 4 years. That is the over a 4 years period, particular debenture holders are having right to provide their document and get cash back to them, cash back from them. Okay. Then our cash flow will be as a debenture holder investor. How many years we will receive the interest? 1 to 4 years. There are 4 years period. Then net interest should be there after tax. Then my interest will be at a percent of 10%. What is the nominal value? No, general value is the 100 rupee per debenture. Then 100 into 10. In the meantime, if you receive the interest, if you remember, as you know, in the financial accounting, there was a interest. If we deduct, then we have to pay lower income tax. Why? If we distribute the dividend, it will not relate in the profit calculation one. It will be the distribution side. That's the after the profit. But if we paid the interest, then there was a tax saving. Then we have to remove the tax impact. Then at the 30% income tax rate, then there will be a 70% tax liability. That's why 1 minus 03 use. Then generally we will receive the 10 rupee interest, but as per the tax saving, we as an investor, we will receive the 7 rupee. Okay. Thereafter, at the fourth year end of the fourth year, we have to get back our cash from the particular debenture holder. Then I will receive their redeem value. As an investor, you will be have a question. If it is, I will be received year fourth year 100 rupee. Why we need to purchase this 102 rupees? As an investor, you are thinking If you are kept this rupees in your pocket, you will be not in a position to earn at least interest. Then if you invest somewhere else, you can earn interest. Is in this case, this is the debenture. Then you will be able to get the over a 4 years period 7 rupees per year. Based on that, you will be receive some amount. Then that is the capital appreciation. If you kept your money in the pocket, you will be not receive this much of interest. If you invest in somewhere else, then you will be able to get the interest or dividend. But you are not interested in the ordinary shares or preference shares, you are interested in the debenture. Then based on that, you will be receive the 6.53 in earnings. That is your expected return. That expected return has been provided by this investor, that investment business. Then that's why you are invest here. That's your minimum rate. If they are wishing to pay more than that, it is best. Then if you are not wishing to more than that, you can keep with your investment. If you are think another business over there, you can keep this money and invest somewhere else. Okay. Thereafter, this is the cash flows at the discount of 5%. How I am taking the 5%? That is the general practice. If it is a here, 7 rupee interest will be received based on how much our investment value. If we receive the 100 rupee, I can earn over a 4 years period 7%. No, then my expected return should be approximately seems to 7%. That's why 5%. It's near to the 7. Then I put in the 5% as well as it is a general practices percentage. Very easy, we can go. If it is here, sometimes if we assume 17 rupees, then I will put in the 15%. What the point? Way how we think about the rate. If it is here 8 rupee, I will be put into the 5 7, which is seems to be okay this rate. Got the point? ළමයි හැමෝටම තේරෙනවද ඒක? මම ඇයි මේ 5% ගත්තේ කියලා? Please give me the comment. ඔයගොල්ලන්ට තේරෙනවද ඇයි මම 5% ගත්තේ කියලා? 5% ගත්තේ approximately 7% වලට ආසන්නයෙන් යන හින්දා seems to be okay ඒකයි 5%. Then under the 5%, today 1 rupee value is how much? Same, there was no any difference. Then that's why I have put into the 1 rupee. Thereafter, here how many period? 1 to 4 years. Then I have to use the present value of annuity factor table. There will be a statistical formula booklet you will be provided by at the exam. If you are not provided, there will be a end of the question paper. There was a present value of annuity factor table as well as the present value of single cash flows included in your question paper. Then you can get the DAS figure. If you are not available, then you can ask from the examiner, that means examination hall coordinator. Then they will provide the statistical table. Okay. Then based on that, we have to decide the discount factor. How we decide the discount factor? Here. What is the rate? 5%. 5% here. How many years? 4 years. Here. 3.5459. This is the rate. Next one. Next one, only 4th year. Then I am not in a position to use this table information. I have to use the single cash flow table. That is the present value of the single cash flow. Same rate. Same rate. 4th year. 0.8227. 0.8227. Then multiply by the discount factor. Then 102 into 1 minus 102. 3.54595 into 7. How many? Then how much I will be receive the interest? 24 and 82 cents. That's the during the over a 4 years period. Redemption value. Then end of the 4th year, I will be receiving the 100 rupee. In today terms, it will be value as 82 rupees and 20 cents. in terms of the investor point of view, I am not coming to my expected minimum return. It will be the more than that. Then I am not interested with that trade. Then I need to go through my NPV value should be 0. This is the NPV value. What is the rate NPV become 0? That is the IRR in general. Thereafter, in here, if it is answer 0, I can use a 5%. Unfortunately, it is not there. Then I have to discount another higher rate. If we use the higher rate, my NPV value will be 0 minus. It is better to minus. Then I can get the difference between these figures and by using this way. How we take the 5%? That is my start point. At the rate of 5%, still I am not coming to my minimum requirement. Then I will be put into my 5% and I will be try to get what is the rate of the NPV will become a 0. NPV become a 0. Then I need to reconcile by using those cash flows, this cash flows and this cash flows. That is the correlation coefficient. Then 6.53. Okay, time is going on. ළමයි හරිද ඒක ඕකේද? Please update me. Okay, now we will move to the another question, critical question in the process costing. Another 15 marks will be available. Process costing. Wellington Textile Limited operate a single process where the raw material are converted into finished textile. The following details related to the month of June 2025. Open in WIP 500 unit, 80% complete of the material. Keep in mind there will be a 100% percentage will be the your equation in here to get the another knowledge. That's why I put into the 80% complete of the material, 60% of the labor and overhead. Unit introduced during the month of June. There was another 6,000 unit has been introduced. Close in WIP 500. During the production method, there was a 400 unit has been available without having completion. Then their stage of completion has been mentioned. Unit of completed are transferred to 5,000 unit. In this correction, there was no losses. That is the blessing correction. But I hope there will be a additional correction in this time. Type this way without having normal loss, abnormal loss, gain. Then student will be stuck. Then they will be using the time, additional time. What we call in the if you are doing in the classroom and your exam question will be vary, then you will be stuck in the middle. That's why I will be getting knowledge without having any losses. How we tackle this question? Okay, in terms of the process, this is the process one. I will be this is the process one. Here input is how much? There was the input, then output to the next process. How much the quantity? How many quantity? 5,700 quantity. Output. Input quantity is how much? 6,000 introduced. Opening WFE 500. Altogether how much? 6,500 production process duty. Then they are not in a position to complete. How much? 400. Then look at the normal loss. How we tackle the quantity. In process, going on 6,500. Unfortunately, we are in a position to produce the 4,700. Then there was a 800 gap between 6,500 and 5,700. Then, but fortunately, we are incomplete 400. Another 400 has been missing during the process. That is the loss, actual loss. 400 loss. Got the point? During the period of month of June, we have introduced 6,000 units. At the start of the month of June, there was opening stock is how much? 500. Then altogether in month of June, there was a 6,500. End of the month of June, we have to finish 5,700. Then 5,700 and 6,500. Difference between that 800 units should be there. Unfortunately, there was a 400 unit actual loss. The balance 400 as kept as a clause in WIP. Is it okay? Please let me know the status. Okay, now we move to the calculation side. You don't have received any, I have not received any response to your side. Okay, let's start the calculation without wasting time. Then you have to prepare the column. How many raw material are available? That is the material, labor, overhead. There are three elements of the cost. Thereafter, total column should be there. Of elements. Dot. Material, labor, overhead. Cost value. There you go, quantity. Then here, actual loss. Actual loss is how much? 400 units. Number two, there was no abnormal loss or gain. Number three, finished goods. $5,700. Closing the play. Altogether should be 6,500. In here, there is no cost relating to the actual loss or normal loss. Abnormal loss is not there, then no need to worry about that one. Go gain or not. Finish. Finish good. Generally 100% of stage of completion. Then 5,000 into 100%. Say 5,000 into 100%. 5,000 into 100%. Why I'm using the 100% to memorize those things. Initially, you can put into 5,700, but keep in mind you have to multiply by the stage of completion. Close in WIP. Close in WIP 400. They have mentioned what is the stage of completion. 470% completion of material. Other costas 50%. Then 400 into 70%. 280. 70%, no? Yes, is it correct? Others, two categories, elements, 4,000 into 50%. That is the 200. Same in the overhead as well. 200. Then what is our equivalent units? $5,980, 5,900 labor cost, overhead likewise. Then here you have to cost, incur cost. First one, opening WIP values. Opening WIP values. What would be the opening WIP values? This one, 200,000, 100,000, 80,000. 200,000, 100,000, 80,000. All of the information has been obtained from question, okay, without any assumption. They are after during the cost. During the cost is the cost 2.4 million, 1.2 million, 960,000. Then add the cost incurred 2.4 million, 1.2 million, 960,000. If it is a normal loss, then you have to deduct the scrap value of normal loss. Sale proceed. If there is no normal loss. Sales. If it is a normal sales, you have to deduct here only. Then cost, total cost. Then evaluation. Cost per unit. Then 2.6 million divided by 5,980. As for the material cost, here 1.3 million divided by 5,900. 1,040,000 divided by 5,900. Total cost of production, direct material, direct labor, overhead 831 and 39 cents. Is it okay? Lamai, please let me know the calculation are correct. In this question, I have been used the decimal places figures. At the exam, there will be a round of figures. Definitely, to without any hesitation, you can go with the answers at the question paper to get the some confidence. That's why I use the decimal figures. Okay, please let me know the only one student has been comment. Okay. How we prepare the process costing account? I will be go through the quickly. Then you have to prepare the process costing values and quantity figures. Values quantity. Units. Other side also the units. Per unit value. Then opening WIP. How much the value? Quantity is 500 quantity. Raw material side 6,000. Direct labor, production, overhead. Those are not quantity, those are the values. Okay, what is the direct material cost? 2.4 million. Opening WIP value is altogether this one, altogether 380,000. 380,000. Direct labor 1.2 million. Overhead 960,000. Same cost here. Okay, thereafter actual loss or normal loss 200. There was no abnormal loss. Gain 0. Finished good 5,700. Finally closing WIP 400. Then there is no value, abnormal gain not there. Then finished good value is 870, 831 rupees into 5,700. Then closing WIP will be value based on what? Here, closing WIP. How many units are available? 280. What is the value? 280 into 434 rupees is same, then plus altogether. Got the point? Total count is telling 4.9 million. 4.9 million 4,000. Is it okay? Lamai, please let me know. Yes, one answer has been received. How we take 384 WAP? WAP 380,000 has been obtained based on the question. Here, altogether this one 200,000, 100,000, 80,000. Altogether 380,000. Is it okay? Or else you can use this way. In this table, open in WAP value, see this one, then altogether this one. Brian, Abdul, Yadushini, Rashmika ने आंसर करा नहीं. Kenuli, what about your answers? Okay, now we'll move to the another question. I think all of you are limited factor question. Question number 7. Another 10 marks. When you receive the 10 limited factor question, initially you have to identify whether it will be limited or not. Sometimes examiner will be tell directly material A limited to the 48,000 kilogram for the last quarter 2025. Then they have direct mention. Even though they have mentioned, you have to reconcile it. Identify the working number 1 requirement. Calculate the requirement. How many product? Small, medium, large. How many quantity? Small 5,000 quantity, medium 4,000 quantity, 2,000 quantity. Material A. Requirement has been mentioned. K in kg terms 4,000, 2,400, 4,800, 9,600. In this question, yes, 4,000, 5,000, 4,000, 2,000. Then you have to get the kilogram in terms. We assume 5,000 small product pillows need to 2 kg, 3 kg. Likewise. And you have to multiply by the 5,000 into 2, 4,000 into 3, 2,000 into 4, 30,000. Then requirement is 48,000. Available is the 48,000. We can use the maximum utilization even though limited to the requirement amount. You have to rank W2, rank in the product based on material A. Then small, medium, large. Then you have to calculate the selling price minus variable cost. Based on then you will be able to get the contribution per unit. Then selling price 5,000, 9,000, 18,000. Variable cost altogether 2,400, 700, 400, 3,500. Altogether 3,500. 4,800 plus 1,400, 800 into 7,000, 9,600, 2,100, 1,500. That's the variable cost. Then get the contribution. Now you will be able to get the contribution per unit. Thereafter, you have to decide how many kgs used for the material A from material A. Usage per unit 5 kg, 3.5 kg, 4.5 kg. Then you have to identify the per kg contribution. How we calculate the per kg contribution? This is the 5 kg contribution, then divided by the 1,500 divided by 5. How we get the 5 kg, 3.5 kg in equation? There was I will check. Please check with the equation. If it is not, I will. Then you can write down this 5 kg, 3.5, 4.5 kg. Thereafter here 2,000 into 3.5 kg. Thereafter 4,800 divided by 4.5 kg. The per kg 1,500 divided by 5, 300 rupees. 2,000 divided by 3.5, 5,701. Based on that, you have to rank it. 4,800 divided by 4.5, 1,000. This is the number 1. ranking 1, 5700 to 571 is the rank 2. Finally, small one 3. Based on that, you have to resource allocate. Firstly, 48,000 kilogram you have to be utilized for the large pillows. Secondly, medium pillows. Finally, if it is remaining, then you can consider the small pillows. Then now you have to resource allocation. Bucket number 3. Resource allocation. Based on the rank. Rank number 1, large. How many quantity? 2000 quantity into 4.5 kg. Overall 48,000 available. Here 2000 into 4.5. 9,100 quantity we have to use. Thereafter, you need to get the available balance after the first resource allocation 38, 9,000, 8,900. Then rank number 2, medium. How many quantity? 4,000 quantity into 3.5 kg. 4,000 into 3.5. 14,000 kilogram. Thereafter, what is the remaining? $25,000. Rank number 3, small. 5,000 quantity into 5 kg. Fortunately, here almost balanced now. Then optimum production mix, large, medium, small. Large, from large pillows 2,000, medium 4,000, small 5,000. Got the point? This is the optimum production mix. Now I got the point. Okay, in here we will go through the back and identify the how many marks we have already earned. Here under the working under the marginal cost method, 10 marks, 5 marks. Thereafter we have done production budget, functional budget, 5 marks. I have discussed the all of the functional budget. Okay, based on that you can go through whatever the budget examiner will be tested. 5 marks. Thereafter I have discussed WAC calculation. 10 marks. Then process costing. 15 marks. A limiting factor. Almost 45 marks, 50%. Within 2 hours period, we have been able to get the 45 marks. Okay. That means during this session, I think all of you are able to earn 45 marks without having any hesitation based on the available guidelines as well as the practical calculation. Within 2 hours period, you have been able to get the 45 marks means in the with another two to yes couple of weeks are available. Based on that, you can go through this question. Definitely, this area you have to be master standard costing. Generally, each and every student aware that this question will be available another 15 marks. As I mentioned, cash budget 10 to 15, 10 marks altogether. Here also 25 means 70 marks. Today, I have been introduced 70 marks for your examination. It is a good sign to all of you. I think you will be able to get these marks based on this seminar series. Currently, I am sorry to tell you that I am out of Colombo. Then I am not in a position to open my web camera due to the signal limitation. That's why I closed the camera and did the session. I am really sorry for and my apologize for this inconvenience has been caused during the session. Without having face, I think all of you are able to get the available knowledge by virtual without having face. I think all of you can see my what we call in the share document based on that, which is the same me. There is no any deviation. Then I hope this 70 marks will be available to all of you through the exam. If you have any concern, I am available with the WhatsApp group Madushanka Jayavira. Then you can mention the sign and search Madushanka Jayavira. Then you can put the whatever the question available. I will be available and inbox you whatever the question raised at the WhatsApp group. Okay, now we will finish off the today's session due to the time is up. Yes, definitely I will be share this workings, my Excel workings with the JMC teams. Then you can get it from JMC V-Learning teams. Okay, thanks a lot. Good night. Thanks for the JMC V-Learning team as well.